Hey, what's up, guys? So let's have our usual breakdown on a Euro USD market. And first thing I want to start is on a monthly chart. And on a monthly chart, what we can see that we had this very long 12 years trend that finally was broken. I'm going to put a little line here so you can better see it. So basically, this is the trend line that started on 2008, and it was finally broken in July 2020. Now what we can see here, then the market broke above this line, it retested it, and made another push. This is the scenario that called the push, correction, and a push. Right now we're making another correction, and we're making another correction to the previous resistance, which is this area here. So this is basically on a monthly what we can expect. But let's look at this a little more. First, when did this impulse started? It actually started in April, after we had this March COVID started months, which had a lot of volatility and ended with this little tiny candle. After that, it went down here, and starting in April, it started a nice push to the upside and finally broke this trend. But let's look at this push a little more careful. If we stretch our Fibonacci from here to its top, we can see that before moving up, market has to have correction. And to make a nice push, the correction is supposed to be at least for 38%, which is nicely aligned with our previous stop right here. Right? If we go to a weekly, what we can see here that when market broke this, it makes a little deceleration, and it tried to retest it first, confirming the trend line. Then it was rejected, made this nice M, and we expected it to retest this zone and hit this point here. But this has never happened, and the reason for that was November 2020, which was an election month for United States and of course for US dollar. So on November 3rd, the market rejected based on the news that Biden was elected, and it pushed the market up. It tried to retest this high and then corrected and made this nice impulse upside, and then corrected and then start decelerating right here. What is market doing now? So after nice push, we can expect for correction. So let's remove this Fibonacci from here, and I will start measuring the other one from beginning of this move. Let's first stop here. So moving from the bottom to this point, what we can see that there are two candles, one right here and another candle right here, are not related to this impulse. It means that they can be either support or resistance. So let me mark this area for you. This area, it's 23%, and then the other one is at 61%. It's also a very important zone. Okay. Now we can see that when market made this impulse, it started correcting, and it corrected to 23 and then rejected and tried to make another impulse, but it couldn't break higher than 23.50 right here. So let's stretch our Fibonacci and correct it. Now we can see that the market started its correction, and it's corrected to 38%, then was rejected, tried to retest it, rejected again, and finally broke it. So when market breaks 38%, what we can expect, and let's go to a daily and see what's really going on here. When market breaks 38%, and this is actually a very nice zone here. Let me put some ellipse here. This is the zone it was rejected first time. This is another zone it was rejected second time. And also this zone was a support already historically in this zone. So this is very important zone, and for us, breaking this zone creates extremely strong resistance zone. We can get rid of this. We don't need it anymore because we have created a new very strong zone right here, which is now a resistance zone right here. And last week, what we saw that the market broke this zone and now it's retesting it. So at this point, we need to start monitoring. Right here, we will be monitoring very important resistance. Oh, I'm sorry. Okay. So at this point, we will be monitoring what market is doing. What can happen? The first scenario is market breaks this, retest this zone, and then it will be rejected. In this case, the next level will be this line. And we can put this horizontal line here so we can see the top. This will be our goal number one. Goal number one. Okay, but what happened if market is rejected from this area? When it's rejected, it's gonna go down, retest the previous support line, and then if it breaks, then it will go to next very strong level. And next very strong level is aligned right here. Remember our top here? And this is almost 61%. I will go and, I'm sorry. Let me remove this. I'm gonna go and correct this zone here, all the way here, and around 61%. So this is another support, and it's also previous resistance right here that we need to start monitoring. First candle is gonna be right here, which probably slows our chart right here. We need to monitor this area because now it's a resistance for this zone, right? And if we break under it, our next goal is going to be right here. But what happened if we break even more down? If we break even more down, then we have next goal, like right here, that after retest, we can go all the way to this line. This is our previous support zone, which rejected our market 2 times. But remember, our goal is to hit this zone, which also is aligned with a trend line. So we cannot disregard this area because this is very important area for the market, which we were supposed to hit, but we didn't do because of the election. Right now, economics starts getting better. Election has passed, and now we can easily expect to this point before going to 125, which was previous high over here, which is basically is goal number 2 for us. So to hit this goal number 2, we need to be rejected from either support lines. But remember that this zone is a must for a market to go over there because we never made it. We basically made a gap right here, which has never been filled. And what market does, it always fills the gap. So right now, we need to be very careful. I know we all want to see goal 1 and goal 2, but we need to be very careful and monitor these zones right here. I'll put some marks here. Zone to monitor 1. Zone to monitor 2. Three and 4. So this is the forecast, but don't forget, the market is not predictive, it's got to be reactive. So monitor these zones and see where it goes. So far, because we have this corridor between two zones, which is actually very important zone, like right here, that's a resistance that we used to have, and also right here, and also right here. So this is also support zone. So most possibly what market is going to do, it will be moving in between these two lines for a while until it gets enough liquidity to broke either way. And then when we have enough liquidity, we will either go up or we can also go down. Let me know what you think. There's a comment box below. Press your like if you like this video, and I would really appreciate if you share it with your friends. Good luck. Bye bye.